Hello, viewers, and welcome to another exciting episode of the SAIPAR podcast. My name is Demi Sakala, and I'll be your host today. On today's episode, we are joined by Dr. Dale Mudenda, Senior Lecturer at the University of Zambia, renowned author, and Associate Director under the Economics and Development Program here at SAIPAR. In one word, I would call him the economics guru. Welcome, Dr. Mudenda.
Thank you very much, madam. It's a pleasure being here and to join you today on the podcast.
It's lovely to have you.
Thank you.
So before we dive into the economics engine room and break down the economics of the nation, I have a very basic question, which I think you've heard the phrase everywhere in town say, economics ya kosa. So my question is, what exactly is the economy? What is economics?
Well, economics is basically a discipline that looks at how best you can allocate resources. First of all, it is based on three principles, which are that one, we have unlimited wants as a society. What that simply means is that everyone would want to have everything that they wish to have. But unfortunately, we cannot have everything that we wish to have because we don't have enough resources to meet that. And that then brings in the question of scarcity. Scarcity because they're not available in abundance so that everyone can have everything that they want. We've got to make a choice. So once we make a choice, it means that we've got to forego one thing to do the other thing. So economics is about how you make of those trade-offs and then you optimize the resource allocation. So if you have to get something from this definition that I've given you, you're basically going to say that, look, people's needs are unlimited. Because needs are unlimited, unfortunately, because they're unlimited, they cannot be met fully because one, resources are scarce. And because resources are scarce, you are then forced to make a choice. And when you are making a choice, you forego one of your needs to attain the other one. And therein lies the problem that every person faces in life. Because if you cannot have everything that you need or you want to have, you end up having to make a choice with the limited resources that you have. And that choice that you make should give you the maximum satisfaction, or indeed should bring you much more returns. And therein lies the difference between successful countries and poor countries that are not successful given the same resource endowment. How do you optimize? What kind of decision do you make when you have the resource that you have? Is it one that increases the welfare of society? Is it one is just a reckless decision that does not optimize the welfare of society? So therein lies economics, and we try to look at then how best you can allocate these resources and ensure that society improves overall. The definition can be quite wide and is broad, but I can just give you that very basic definition so that you can be on the same page with the viewers and indeed everyone else who has been in the class of economics.
Thank you for that definition. I'm pretty sure the viewers out there who used the phrase and had no idea what they're talking about.
Yeah.
So we've been hearing that the Zambian economy has miraculously strengthened, like before the elections have actually started. So from an economics perspective, what indicators are actually improving?
Well, great. So before you can talk of the strengths, you should have a basis upon which you are discussing the strengthening of a particular economy. And in most cases, I really like speaking or discussing the Zambian economy from the context. And in this case, the context that I want to bring you to is way back 2006. In 2006, Zambia developed what we call the Vision 2030, in which case we set ourselves the targets and obligations and the activities that we are going to undertake to attain what we can call a developed Zambia, in which we've lower poverty levels and everyone is in the middle income status. So in setting that scene, I'll just give you one indicator that was supposed to be critical in the attainment of that vision, and that was economic growth. So if we were to attain development that was going to lead us to have at least a middle income status by 2030, we needed to have the economy growing at an average of 6-8% from 2006 to about 2015, then increase to above 7% up to 2021, and then the economy moving upwards to about 10% up to 2030. In that way, the consistent growth and improvement in the economy was going to lead um, lead to what? To a middle income status of the country being developed, and indeed the welfare of people are improving. But hey, we then moved up from 2006 up to about 2015. The economy was robust, doing very well. And the indicators of a good health economy is one, it must be growing. That is, the output in the country should be increasing and the increment should be quite rapid. We had attained the growth rate of averaging about 7% from 2006 to about 2015. And, the prices themselves must be predictable. So when you're talking about the prices, we're talking about commodity prices, that is the goods and services that you buy from shops. In addition to the goods and services that you buy from the shops, the uh, price for money, the interest rate must be stable. The exchange rate, that is the cost of one currency for another, must be stable. But unfortunately, from 2006, we realized that from 2015, we realized that we had a shock uh, based on the Zambian economy, which is driven by copper and as well as other commodities. There was a reduced demand for copper products in the international market. That reduction in the demand for copper had a huge shock on the economy in the sense that then the economy started to plummeted its growth from an average of about 6% to about 3%. But that was compounded by another factor, which was the drought. I hope you remember that we had a drought in 2015.
Yes.
And unfortunately, the major driver and the stimulant of economic growth in Zambia is the mining sector. Because of the prices plummeted, the output also plummeted. And the plummetion in the prices also led to a reduction in the foreign direct investment. But at the same time, also there are some policy failures which were directed at, for example, frequent changes in the mining policy regime. That was not conducive for further investment. So you realize that from that time, the economic growth averaged at about 1.5% up to 2020 when we had actually negative growth. So from 2020 negative growth, we then started to see the rapid rise in the prices. Say from about 2019, 2020, the inflation rate started going to double digits, moving from the average of 6 to 8% to it went up to about 2022 to 22%. The exchange rate in 2013, we had it at around 10%, not 2013, around 2016, 2017, it was around the 10 kwacha per dollar. And that increased to about 13, then it went to about 17, then it went to about 22 as of, say, 2020. Of course, then the fluctuations continued to be there. When you looked at the debt itself, we had a situation where the debt itself was getting compounded, it was increasing, and this debt was not just normal debt, as in concessional debt, that is debt which is borrowed at low interest rate, but it was debt that was borrowed at high interest rate. So the whole scenario was actually driving us towards um, a weakened economic situation. So when people say that the economy has improved, it means that we have seen some improvement in the performance of this economy. That is, the prices must start to be, the prices themselves must start becoming stable. That is the inflation rate. And by saying that inflation rate must become stable or should be reducing, we are not saying that the prices in general should be reducing. No. We are saying that the pace at which the prices are increasing must be slowing down. Then also stability in the exchange rate must become more stable, in which case would want a stable, predictable exchange rate. If it is appreciating, it's good, but that should also have a limit to which it should go. And then the other macroeconomic indicators like the debt situation, as well as the fiscal position, really have greatly improved. And that is what people are talking about when they're seeing the macroeconomic environment and the economy seem to be improving. So it's a whole basket of things that should be looked at in context so that we have a base upon which we start to build and infer the fact that there is some form of improvement in the economy.
Okay, thank you. That's very insightful.
Mouthful.
So you spoke of some of the indicators improving. So do you believe that the indicators that have improved, it's a genuine structural reform, or it's more politically driven?
Great. That's a very nice question as well. Is the improvement political or is it genuine? First of all, you realize that it is always the desire of every government to improve the welfare of its people, and definitely to ensure that the foundation on which it is building is correct. Now, if you look at the Zambian macroeconomic improvement, we can say that the critical message that we had in 2021 from either the opposition or the by then opposition or by the ruling party by then was that of saying we shall improve the economy, improve the macroeconomic stability, and ensure that we get to some structural reform or some form of arrangement with the IMF and the World Bank and other donors to ensure that this reform takes place. So what has happened in Zambia is that from that time, we've had some sort of deliberate policy uh, processes and policy implementation strategies that have resulted into the improvements in the macroeconomic environment and which have also led to marginal improvements in terms of the economy as a whole. So I can say that the improvement is not accidental. It is one that is based on an intentional government strategic approach to the management of the economy. I can assure you that if there was no intentional management of the economy, things would not have been where we are today. I'll give you an example of where we've come from. Definitely 2021, 2022 had COVID, which impacted negatively on the economy. And that was beyond any person's ability to control because it is COVID situation. Beyond that, then we suffered from what? A drought. And that drought has implications on the fundamentals or indeed the economic indicators. Because once you're hit by the drought, the first thing that should happen is the food prices. They start to go up. And if you look at the inflation rate in Zambia, it has been anchored on a very simple movement in the what? In the food prices. Food prices have been the key drivers of the inflation rate in Zambia. So with the drought, you realize that there was that increase in the food prices in the country. But did you know that it could have been worse if government did not intervene? It would have been. How did government intervene? There was that strategic approach where they allowed some government institutions like the Zambia National Service, like the prisons, to produce mini meal and price it at a lower price so that the private sector does not go away and improve it to very high prices. And amazingly, it worked in trying to stabilize and slow the inflation rate. And definitely that was all tied up by the deliberate implementation of fiscal and monetary policies that are aimed at restoring the economy to its stable position. So ultimately, what I can say is that the entire process of stabilizing the economy is not accidental. It is something that is arising from deliberate and intentional policies by government and the policymakers that are involved in the whole process. Yeah, like government, definitely not only government, but also the cooperating partners, as well as the multilateral institutions that are involved in trying to promote a stable economy.
Okay, it's
Mm.
very interesting to note that even weather changes can actually affect the economy to that extent.
In fact, that's what you've come to learn to be climate change shocks. The economy itself was not actually just affected by, say, COVID as an external shock, but also by the weather patterns. Because what would have initially happened is immediately you have that shock, which affected the food prices. Then the food prices go up. Now you should realize that the way we measure inflation in Zambia is based on more than 400 products. And in this more than 400 products, food items carry the highest weight because these are the basics that every person consumes. So once you have got a lower production in the country, the prices go up. The first thing that will happen is that it will impact negatively on people's incomes. That is weather which is causing that. Now, to mitigate that, government will need to go to spending more money, say maybe to import food or to provide for social welfare programs to try and ensure that people are kept alive during that kind of a shock. And all those have got a destabilizing effect on the budget by the government and also on the macroeconomic fundamentals, because then you may be forced to import more products, which will have ravaging effects um, on the um, on the exchange rate. And once exchange rate is depreciating, all the imported products will start to go, prices will start to go up, and they'll be dragging the inflation rate up. So overall, those shocks were critical and are actually able to throw the government plans and strategies off the window and cause more harm to the economy than you'd imagine. Of course, there are some of the changes that occurred in the global world, like the war between Ukraine and Russia, as well as the Middle East crisis, where we had Israel and Palestine infighting. Those also caused some disruptions in terms of oil prices, which are skyrocketing. And oil is a key ingredient of our import basket in the country. Because of that, they all filter through to affect the macroeconomic environment in terms of the prices, in terms of how the fiscal position of the country is going to operate, as well as the exchange rates. And once that is destabilized, you are likely going to have a difficult situation as a country. Now, it takes an art and an understanding of how these variables are related together to infuse policies that can actually bring some form of discipline to ensure that the economy does not go haywire in that kind of an environment. Mm.
Okay. So, historically, has it ever been noticed to say the African economy, do they experience a boost during the election period? Is that something that you've ever noticed?
So that's a very good question. What happens during elections? Now we've got from economics perspective, I found to basically first of all push into the theoretical approach. There are several ways that government behaves. The first thing that a government would do is if they realize that we are likely to lose an election and they have got an agenda, the first thing they will do is to implement the policies that they wish they would have implemented if given an opportunity. And that will usually be associated with increased expenditures, which are likely to ravage off the economy. So mostly what would happen is not looking at the overall economic well-being, but then it affects the government expenditure part. So most governments, what they'll do during an election year is to try and put in some form of cosmetic policies that will look appeasing to the people so that they can win power. So they'll invest into that. They can incur debt, spend a lot of money, and ensure that the economy look cosmetically good so that it can look like it's boasting to win the elections. That is quite common among the politicians. But could we attribute the performance of an economy to to an election? So this is where now you come in to look at what other fundamentals or structures or policies have been impacting this improvement in the economy itself. So when you come to the story of Zambia, there are several things that you should look at. First of all, what is happening in the real sector? By real sector, I'm talking about the productive sector. Then what is happening in the fiscal side of it? That is in terms of expenditure by government. Now, if you look at the real sector in terms of Zambia, from 2015, when we had some those shocks that we had from the global, I'm sure you used to hear the term that it is global. That's where it was coming, that from what is happening externally affects you. Though you should be able to try to manage it, it will have an impact on your situation. So ultimately, what is happening in the case of Zambia is that the plumation in the foreign direct investment has been reversed. From 2022, somewhere there, we have had an improvement in the foreign direct investment. It has fallen from an average of about 6% of GDP in 2015 to about 1% of GDP by 2020. And then now it has gone towards 4% of GDP, which is a huge increment. But where is this foreign direct investment going? We could be asking ourselves. Firstly, the mines are the key absorbers of this foreign direct investment, which means that we have got now improvements in the production process of copper, in production or indeed exploration. This money is coming in. Secondly, agriculture is also absorbing quite a lot of foreign direct investment, and also the manufacturing sector. In the manufacturing sector, if you have observed, I don't know if you're aware that we have Zambian car batteries made in Zambia.
Really?
We have fertilizers being made in Zambia. We've got floor towers that are being made in Zambia. we've got a lot of products that are coming in. So the productivity and the diversification process that is taking place is not cosmetic. It's something that is structural. Though the structure of the economy is changing quite slowly, there is some form of improvements in that. So when you look at that dimension, we can say that the pre-election improvement is not a cosmetic one in that regard. But you can also go ahead and look at the fiscal side, because this is where government's moving to try and you know, play around to ensure that they get reelected. How is the budget process in Zambia being done? In this case, I would say that over the years, there have been some form of fiscal consolidation, in which case government has been trying to reduce its expenditure and minimize the budget deficits. But what have we seen in the recent past? I can say that government has been quite disciplined in terms of how they have been spending. Of course, from my perspective, possibly I can raise a few questions of certain expenditures within the budget that I've not seen, like importation of electricity. Where does it come from? Is it a political strategy or is it a production strategy? Where is it lying? Is it a political appeasement? Well, it is good for the economy, but what is the impact on the overall budget process? That's one question that you could raise. Also, we had, for example, limited budget structures for the purchase of maize from the farmers. That, for example, caused some sort of deficit in terms of how government was going to finance it. It wasn't the budget. They mobilized resources. The question is, where is it coming from? Would it happen if it was not an election year? So those are some of the questions that you'd ask. But overall, I think there's this fiscal consolidation that keeps the budget deficits quite affordable and within frame. But overall, we are saying that there is a structural form, but should be quite wary and be watching closely on the fiscal side of the economy to ensure that the elections themselves do not overdrive us out of context. But I'll bring up some points later for us to appreciate possibly what is going on in the economy for us to avoid some of those issues.
Okay. So I'd like to draw your attention to one of the topics which most people have been hearing about, and the IMF. And to an ordinary Zambian, I would like you just to explain how the IMF is actually affecting the Zambian economy.
Great. The IMF is a very critical institution that was formed way back in the 1940s, around 47. And, from its setup, its idea, the establishment of the IMF was first of all to ensure that one, they do surveillance of the economies of the world. So whether there is a crisis in an economy, the IMF always goes to a country and looks at what is going on. First of all, before they can even look at the country, they look at the world as a whole. So what they do when they're looking at the world as a whole, they'll look at regions that are likely going to grow and regions that are going to grow faster than any other region, and possibly why. Then once they have done that assessment, is that supposed to raise any kind of, pointers where the weaknesses in the global economy is likely to be, so that then the policymakers can quickly intervene and rectify any problems that are likely going to issue into the process of the development of the year. They do the global forecasting twice a year because it's quite difficult for you to be consistent over a longer period of time, things of to do with inflation rate, exchange rates. Once they've done that, then they go to country-specific cases. So, for example, this is what they call Article 4. This Article 4 is done in every country every year. And what they do is they look at how the fiscal position of the country is. That is how government budget deficits are, how the monetary policy is in terms of the central banks how they are, how sound the monetary position of the country is, the debt situation, is it sustainable? They also bring in institutional arrangements around the country that drive the forces. And then try to point you as a country to say, if you do not take care around this, you're likely going to drive your economy down towards the trend. And then you as a country should be able to link to the global report that has been given. So the IMF itself is like one of the friendly monitor and evaluator of your economy and your fitness in terms of your diverse aspect of your economy. So from that, you can check on what is happening and they can suggest where you should actually focus your energies in. Uh, from about 2015, 2016, they were raising a lot of weaknesses that the Zambian economy had, especially in terms of debt management. We defaulted with the IMF. Definitely, you could remember that for 2019, 2020 or so, the IMF country resident, the country rep was actually asked to leave the country because of those instances that we should start to undertake some sort of discipline in how we manage the macroeconomic environment. So ultimately, what the IMF did was, after they realized and the country itself realized that we needed the IMF through the political manifestos of 2020, 2021 elections, everybody was saying we want to bring back the IMF. It's an indication of their importance to the management of the economy. So what the IMF do? When the IMF realized that there's all these unsustainable situations and Zambia went into huge fiscal deficits, which means that there is no longer stability in how government is spending. You have budget deficits, you cannot meet your obligations, and then your external environment, in terms of how you are able to generate foreign exchange reserves to finance your debt obligation, to finance your imports, was actually at risk in terms of how Zambia was. We were actually falling for about 1 month of import cover, which means we could not actually go ahead and continue to spend in terms of external debt obligations. You can have the Kwacha value of how much you want to sell this a date to say, let's say to America or to China. But if you don't have the dollars, you cannot pay. So you are liquid but not solvent because you cannot pay. So because of that, we defaulted on debt. And once you default, the credibility of your institutions become a little bit more questionable in the international market. One. Secondly, and when you're defaulting like that, what happens is that the private sector itself will look at your environment as an investable. Why? Because when the government is in a debt crisis, the next thing they have to do is to pay that debt. To pay that debt, they have to look to the private sector to tax them and get that money to pay. Then the foreign direct investment will not come. And even the local firms, because they are there, they cannot easily get debt and financing. So the situation was gloomy. So when the IMF itself came in, it was like a big brother who is trusted by everybody, hand holds you and says, look, I want to work with you and be the face for any pronouncement that you're going to make. So that if you make a pronouncement that we're going to do this, they can guarantee your action. So the IMF comes in to cushion your inability to pay your external obligations in terms of, for example, balance of payment crisis. So when the IMF comes like that, they handhold you. So they are there to restore the fiscal fitness. What do we mean by that? Ensure that they help us uh, to achieve the goals that government has suggested to the IMF that we're going to meet. Sometimes what happens at the IMF when they come in, you say, yes, this is the sickness we have. You tell them and they say, yes, we agree with the sickness. But what is the treatment? Government will propose what the treatment is. The IMF will propose what the treatment is. They will not impose. Then you bring in together. You say, from this information you have, what is the credible solution to the problem? And everybody agreed we have to reduce the debt. Which debt do we have to reduce? The external debt, because we can't pay it. Okay, we shall stop borrowing commercial loans. We agreed. We agree, all of us? Yes. So you hold it on. Secondly, of this date now we are not able to pay it. How are we going to do it? We restructure it. What are we going to do to restructure it? We try to request the lenders to give much more longer time and possibly reduce the interest rate so that we pay it at a much longer time at low service rates. Okay, we're going to do this. So if you are already in default, you go by yourself. Your rating in terms of credit rating is negative or is bad outlook. But when someone is handholding you, they say, we shall watch over this person and ensure that this is actually attained. So the IMF came in as a big brother who was willing to handhold Zambia and work with Zambia through that particular crisis situation to ensure that we restore macroeconomic stability. What is this? Ensure that the inflation rates, ensure that the exchange rates are stabilized, restore the fiscal fitness. That is, ensure that the fiscal deficits are going down, but there's also what we call fiscal consolidation, which means we try to lower the deficit that we are spending and also become focused. And of course, the typical approach by the IMF is to say, what are the useless expenditures that you need to cut off? Most often than not, you have to look at, are you subsidizing the parastatals? Are you spending on luxuries? Some of the things like, are you spending on fuel? Which may be benefiting more of the rich than the poor, or companies that are private than the entire society. So you look at that. So you cut off some of those excess expenditures to ensure that your budget remains within some um, form. And once the IMF, continues to look after what you're doing, everybody else starts to have confidence in that reform. And once the confidence is restored, you might find that you can now become credit worthy and also become possibly able to attract foreign direct investment. And this is what exactly happened in the case of Zambia. There was this program that they put in place and said, we shall help you with some money to restore your external competitiveness and balance in terms of the reserves. Then, in addition to this money that we're going to give you, we say, okay, you have suffered because you see, from the IMF, every country contributes money. From the money that you have been contributing over the years, all the countries that have suffered from COVID, you're all being affected. You can't pay your external obligations to a good extent. We are giving you part of this money. So that's what you hear as a special currency that we have under the IMF, which is the special drawing rights. Yeah, I'm sure you have heard of the SDR. So that's the money Zambia gives to the IMF annual subscriptions. So they gave us part of that money, and all that money went towards the building of the reserves and restoring back the external competitiveness. And using the IMF itself and the framework that was done with the cooperating partners, we went ahead to manage to restructure the debt. And because they are hand holding us, people could trust us that yes, because you've got someone who is watching over you, you may manage to actually stabilize your economy and pay us in future. So the IMF has been quite a good and friendly supporter to Zambia's restructuring process to ensure that restore back macroeconomic stability, restore back the external stability, restore back the fiscal stability, and also generate back the confidence that is required for an economy to grow. To create a foundation on which the economy can grow.
If you
Mhm.
spoke of the IMF programs and the debt restructuring, with the current stability, how much of those programs and the debt restructuring can you contribute to that stability, current stability?
How much of that can I attribute to the IMF?
Mm.
To be honest, it's like you're a drunkard child. You are borrowing from everybody else, and your father comes and stands and says, "Look, I'm going to back up my son." Your wealth father says, "I'm going to back up my son." So then everybody starts to trust you, isn't it?
Yes.
To a very good extent, it's quite difficult to trust a politician because the politician has this age to spend more than what they have at all times. So now to ensure that they're able to do that, you need someone who actually monitors them. So the IMF becomes a very critical institution. I think in the case of Zambia, from the time that we started to implement the IMF program to date, was that 2020 to 2023, they have had about 6 evaluations of how we are going. And those monitoring and assessments brings about the second person who says, yes, our drunkard son is able to restore or pay the obligations that they have, or they owe, or indeed they are adhering to the agreement that we have, and we cannot rule them out. They have been a very critical player in Zambia's stability. But then that has to be combined with a willing political regime. Because there are times when politicians have actually presented the wrong numbers to the IMF, hiding the other numbers, and then you still find yourself in a haywire situation. Though that is quite difficult, it has happened in many countries within the region as well. So the IMF is a very critical cover that almost all countries use when they're in a crisis to ensure that they develop. You may be hearing people saying that the IMF is a bad institution. We've got countries that have done well without the IMF um, at the expense of maybe pointing out. You've heard of Rwanda being fine and people saying that they have not been under the IMF. They've been under the IMF. They have grown under the IMF, except the kind of support you receive may be different depending on how your debt situation is or your macroeconomic stability is. If it is too bad, the measures they put in place are quite surgical to ensure that they remove the tumor that is the Sepenif process. But if the healing process is okay, then they reduce the kind of dose to ensure that then you move towards the right position that improves the economy as a whole. So they are a necessary institution in the global market because they do not just come in to give you that credibility. They do not just give you the capacity building that you need, especially among private and public sector players. They do not just give you those assessments that are independent, but they provide that furtherly support to you. And like enough, they have changed over the years from imposing to a negotiated settlement because they realize that countries are different in terms of structure, in terms of resource endowment, and in terms of how they respond to external shocks. Previously, they had a uniform policy across countries, but now they go to look at how different each country is and implement what is suitable for that particular country.
Are there any practical African countries who have been in a similar situation with Zambia, and with the help of the IMF, have actually been revitalized or boosted? Like, are there any examples?
Well, we've had a lot of countries that have faced the trouble. I'll give you two scenarios or countries that have suffered. Zambia and Ghana, they have been almost like twins. They have gone through a situation where, at the time that Zambia was doing well in the 2000s to early 2000s, Zambia was doing well, Ghana was doing very well. Come to the mid 2010s, Zambia goes into trouble, Ghana also goes in trouble. They have all been actually going through the structural reforms and stabilization program as we are talking, and they're all coming out of the same kind of situation. But like I pointed to you, Rwanda is a shining example of a growing and improving country. And the improvement and everything there is not accidental. It's policy and political willingness, but also the involvement of the multilateral institutions like the IMF in the whole programming process. So if you use the opportunity they give you well, then you're capable of coming out of your difficulty to move to the right position. Because the first place, the misunderstanding most often than not is that the IMF pushes countries in the bad situation. The IMF will never come to tell you that overborrow. They'll never come tell you that after you've overborrowed, you should spend money on luxuries rather than investment. Those are political positions and decisions, which comes from where I defined economics to say resources are scarce and how you use those resources matters. If you, for example, get a loan, instead of investing into real assets that are going to generate money to pay the debt, you invest in consumption. You're likely going to fall back into that situation. The IMF never tells you to do that. But when once you're falling, they'll come and tell you that, this is wrong what you're doing. Can we try to improve and ensure that we allocate the resources in the right position? So countries that have hid it and have worked well and have had strong long-term policy measures that are consistent over years and are looking at a long-term vision of development, they have indeed made it with the support of the IMF. Mm.
So I'd like to draw your attention to the citizens' perspective. Most citizens often say they don't feel the economic improvement. So my question is, why does the the GDP
Mm.
growth, it doesn't translate directly into lived improvement for most
Okay.
citizens? Yeah.
Oh, yeah. This is one of the very funny issues that has been there. Recall in my beginning, in my preamble, I did talk about the beginning point for Zambia. The beginning point for Zambia in terms of the current policy planning processes is 2006, where we had properly put the graduation in terms of how we're going to grow. To say, okay, let's grow above 7% from 2006 to 2015, then move to about 7, then we go to above 10 by 2021. If you look at the way we have grown, it's not grown that much. One. Secondly, the projection that growth was also assumed that the population growth rate will be about 2.2%, 2.22%. But over the years, the growth in the Zambian population has been increasing to almost 4% now. What does it mean? For every marginal growth that you get as a country, you've got more mouths to feed. So the growth is not actually translating in improved welfare of everybody else. Number one. Number two, um, while the GDP per capita is increasing, only a few people own that wealth. In the case of Zambia, we are saying the key drivers of the economic growth are what? The mines, possibly the manufacturing subsectors, which means that they'll have most of the chunk of this output. So it's not evenly distributed. Now, here is the worrying part that economists have to seriously think about. Growth is expected to generate jobs, and it's through jobs, opportunities, and those opportunities that you can get people into the job, they earn an income, start to feel the impact of the growth rate. But in Zambia, like I've said, most of the growth rate over the long period of time has been concentrated in the mining sector. Now, mining is a very good sector in the sense that it earns a lot of foreign exchange, which is about above 70%. It contributes about 45% of the government revenue. But this contribution is, can I say, over exaggerated? Because it's based on a non growing non mining sector. You see, because the non mining sector is not growing, it's not contributing that much. So what we need to look at is then how do you ensure that these contributions are coming also from the mining subsector? We diversify the economy to ensure that there's improvement. Now, not only for revenue, but here is the thing. The mining sector itself is not labor intensive. The mining sector is capital intensive. What does it mean? It means that in the production of minerals, we employ more equipment, we employ more technology than we employ people. To the extent that in 1991, 1993, we had about 59,000 people that were actually working in the mines. Come around 2015, 2016, we still had less than 59,000 people working in there because they've got a lot of capital. So they don't really absorb a lot of people in there. So you have growth that is driven the mines, but it is jobless growth, meaning that there are not job opportunities that are being created for the people. Now, we may need to think about then how do you translate this growth to ensure that it impacts the people. This is where now the strategic planning by governments come in. How do we get the resources that we are possibly naturally gifted by God in the mining sector? We tax the mining sectors or create a warfare fund. That's why countries that have minerals, they do what they call the sovereign warfare fund, the sovereign wealth fund. In which case they will be saying that from what we're getting from the minerals and commodities, we invest it in some sort of wealth fund, and then they get that money to create and to pop up some of the sectors that are actually supposed to be labor intensive. So in the case of Zambia, we've had that kind of jobless growth, meaning that the impact on the people is quite slow. But the good news is some of the labor intensive sectors like tourism, manufacturing now, and some of the services are starting to grow. We have seen in the tourism sector the numbers crossing over 2 million people visiting Zambia. That is job for the hospitality industry. And the hospitality industry, as we are aware, is more of people interacting with people, labor intensive. Some of the uh, manufacturing subsectors are also quite labor intensive. We hope that in the long term, as we go on, the impact should be felt. But that should not come out usually naturally. It needs strategic planning. It needs government intervention to ensure that the resources and the growth is redistributed to impact the entire society. So mostly it's because the job growth is jobless. Secondly, we are growing fast as a population. So the little cake we are baking is having more mouths to chew. So we are not all getting satisfied. That's good.
Okay.
Mm.
You spoke of this strategic planning. Do you think it's actually enough to be able to um, make the impact that it wants to show in terms of wages, employment?
Well, like I said, strategic planning in terms of how you then use the resources. Um, you know, um, growth. First of all, growth has to be supported. It's essential, and we have said that so far in the mine sector, it hasn't been growth with many jobs, but with fewer jobs because it's capital intensive. So what you need to look at is, for example, in the labor intensive sectors such as tourism, agriculture, and say manufacturing sectors, some of the manufacturing sectors, you'd want to ensure that as productivity is improving, then the wages should be going up. This is what we should be focusing on. Trying to seek higher wages before you improve productivity is the same as telling the company to collapse. I'll give you an example of China. China in the late 80s, early 90s has a lot of labor, most of them not as educated. They get to start working in the what? In the textiles industry, producing a lot of clothes. And when people start to become educated, productivity goes up. most people start to leave the sector, the textile sector, to high tech sectors, which are far much better paying than the textile subsector. So what is happening there is that you start low, you educate people. As people get the skills, then they can go into higher ladders of higher paid jobs and then start to earn more money. So that's the trajectory that we would be looking at, to say, look, we can't at the moment with huge labor, abundant labor, most of it having no skills, and if they have got skills, they are actually skilled in wrong areas. Then we need to reorient them to be reskill them up to the right sectors for them to earn more money in the sectors that are actually coming up. We have other sectors like the ICT subsectors, quite good, well running, but very few people working in there because maybe the skills are in basic business studies and basic teaching and basic nursing. I'm not saying those skills are not good, but we have a lot of them.
Yeah.
But if you can go now, the world is going into the ICT subsectors. If you've got skills in there, you're most likely going to be highly marketable, higher wage, and more paying. So these are the kind of structural transformation that we need to see. That the economy itself should not only move from mining dependent to other subsectors, but we should also be looking at the job market shifting from low paying jobs to higher paying jobs as productivity increases. Yeah, because when productivity is increasing and the economy is expanding, the firms will be fighting for the little available labor. And when they start to fight for this little available labor, they will start to bid up the price, the wages. If you have observed what has actually happened in China, is that actually wages went so much high up that companies started to close, especially the textile subsector, to go to Thailand, Indonesia, where the wages are too small. And that is likely can happen in a country like Zambia if we can only strategically plan in how we move our economy.
I'd like to turn our attention to the aspect of policy. In terms of policy consistency, do you think this is something that contributes to growth?
Um, I think one thing, there's a blessing in democracy, and also there's what I can call a disruptive effect. Most often than not, we've had, for example, Vision 2030, which has been anchoring our development processes. But if you come to the short term, medium term plans, which is like this fifth national development plan, 60th national development plan, 70th national development plan, you find that government comes and disrupts that and sets its own goals and everything like that. So sometimes you do away with what could have been working and start implementing what may actually be reversing back the economy. So what we need as a country is some sort of like determine where do we want to go. For example, you can say, okay, we are now in agriculture. Most of our labor is in agriculture and services. Then when you look at the services, what services are these? Our people are selling in markets. Most of them are selling in markets, selling airtime. I don't know what will happen now for those, given that the cards are being eliminated. So that's another jobless opportunity. People are in very basic, low-paying service sector. We should be thinking about, okay, we're in this and agriculture. Can we move towards graduating to become light manufacturing industry country? What skills do we need? With trajectory, think about the skills. We agree as a country. Okay, from light in manufacturing, what do we want to see? We want to see ourselves being a light manufacturing industry with chemical production, chemicals. Those are some of the ease entry areas. Then from chemicals, what do we want to see? In the next 20 years, we want to see ourselves being a high-tech producing country, high-tech equipment and all that. So what do we need? What skills do we want to see? We define that. And then if there's change of government, we should be seeing some sort of consistency towards that policy option that is going to yield results. So usually disruptions reverses the progress. So we need some form of consistency and agreement as a country where we want to be in the next, say, 30 years, 20, 30, 40 years, and where we want to leave our kids as we exit this world.
Okay.
Mm.
I would want your opinion on what you think are the biggest risks that Zambia's economy will face in the next 24 months.
Okay. The risks. We've talked about the opportunities. First of all, maybe I can talk about the upside risks, which are the opportunities that Zambia has. I don't know. I don't know. You've seen that the improvement in Zambia's economy has been driven by policy consistency, right? In the last 4 5 years, But also, I can mention that the development, for example, in terms of the exchange rate appreciation, it's like, yes, it could have been appreciating, but not as fast as it has been. It has been influenced also by what is happening in America. America's the US dollar has been depreciating have made across all the major currencies, which means that should have happened also in the case of Zambia, isn't it?
Yes.
But the rapid appreciation is because, okay, some fundamentals are already there to facilitate that accelerated appreciation. Now, what happens in America can slow that appreciation and can affect the direction of the currency. So we have had that opportunity, that negative, that potential thing that could be looking at as a potential exogenous shock that can affect the direction of the currency. But in terms of opportunities, the things to do with copper, for example, in the next 24 years, in the next 24 months, it's likely going to continue to increase the copper prices, and the production of copper is likely to continue to increase. And in the medium, that's in the short term, 24 months. In the medium term, I would expect that there'll be resilience in the growth of the economy. Why? Because we expect that the new investments in the mining, such as say cobalt mines, all those new mines that are coming up, will bring on some stock on the market. And once they bring on the stock in the market, revenue will continue to increase because even if the prices slows down, output will be increasing. And when output is increasing, terms the price, revenue will be increasing, government will continue to get its resources. So the global world is quite supportive of the development of Zambia. And what is happening in America in terms of appreciation of the depreciation of the dollar is helping Zambia's stability. But now there's downside risks. Imagine what is happening now in the global market. Trump's tariffs have been, rejected by the Supreme Court. That might lead to America deciding to increase the interest rate. If that happens, the dollars will start going back to America. That will start to have an impact in the availability of the dollars in Zambia. Given we have also diversified in terms of our foreign exchange instruments to the to the Chinese yuan, yeah, that will help us to buff up some of the transactions that have been US dollar based. Uh, that is critical. But then when it comes further to the risks also is the problem that is likely to be political. What happens in the political dimension? Are we going to have peaceful elections in terms of the policy environment? It looks promising, but how is government likely to spend its resources? Definitely, we've graduated from the IMF extended credit facility, which means that the cross monitoring by the IMF is now getting reduced. But then the next question is government going to continue to adhere to the fiscal position of fiscal discipline to restore stability and all that? So that's what we should be putting our thumb on and ensure that government continues to do that. The Minister of Finance has committed consistently that they'll continue to to ensure that there's fiscal discipline. But politicians are politicians. Anything can happen. So we've got to watch that space. Then also in terms of the downside risks, the continuous problem that we have, Ukraine, Russia, and also the in the Middle East, we have seen that the Americans are moving with Iran. How that impacts on the fuel prices is likely also going to affect us if the American entry leads to some form of conflict, disrupts the fuel production, oil production, the prices go up. That will impact our fiscal position as well as our exchange rate. So these are some of the critical issues that we should be looking at as we move on. So the external environment is is likely going to continue to remain good for us, but also there are some hotspots that we should be watching on. The fiscal discipline seems to be emphasized by the government, but a politician is a politician. There's room to actually, uh, hit off the bar and spend more than what they expect. So the next 24 months, we should be looking at that and ensure that we do not throw out what we have so far gained and throw it through the window to unravel the gains that we've gained in terms of the stability that we have as a country.
It's very interesting to see that there's so many factors that actually are external but are actually affecting the Zambian economy.
Definitely, definitely. So what happens in America affects everybody. You've heard when they say when America coughs, everyone. Yeah,
Yeah.
yeah. So what happens in America definitely does help or impacts on the country. Because what has happened in America is in trying to improve its export portfolio and attract companies. So that put those high tariffs which meant that most companies were going to go to America, and to make their exports competitive, they needed a depreciated dollar. Now, that was enabled Zambia also to somehow gain on the appreciation that it had. But given that the fact that now there are these reversals, that might slow down that depreciation of the US dollar, which means that against the Kwacha might start to depreciate. But one of the good things is that the fundamental decisions that government has put in the recent past, which concerns, for example, restoring the reserves in terms of gold from 2020 to somewhere there, we accepted gold as part of the reserves. Then also the adoption of the yuan. China is one of the major trading partners, maybe absorbing over 30-45% of our exports. And if you are looking at rerouted exports in terms of minerals, you discover that takes up to 50% or so of our exports. So with that, and if the payments are done in yuan, reduce the dollar-based expenditures, maybe the stability there might continue to be maintained. But you should also remember that China's monetary policy is there to promote exports, which means that they can depreciate their currency at any time they want to. So that might have an implication on our culture as well. So we have to just watch on those external developments and ensure that we put in measures that can contain any of those shocks should they occur against the country.
Do you have any advice to the policymakers with regards our economy? Yeah.
Advice to the policymakers.
Yeah.
Well, definitely, they always say it's easier to sit on the other side than on the other side. We can all be saying anything that we want to say. What is happening in the real part in the making of policies and implementation of these policies is another thing. But I would say, let us not throw away the gains that we've made. Let's maintain the fiscal discipline and ensure that we continue to restore the macroeconomic stability. I can see that the domestic expenditure is continuously going up in terms of government, and this is funded by continuous floating of the bonds that are oversubscribed. This oversubscription should not really uh, result in us trying to say, let's borrow more because the money are available. The money is available. This has an impact on domestic investment because then the cost of borrowing by the country, the firms is going to be high. And if that continues to be high, we are likely going to face a situation where we constrain private sector growth. And that is not good for diversification. So, to the policymakers, my colleagues, I believe and I trust that you understand all these things in a better way. And let's guard against acknowledging what we've so far done, the efforts and the sacrifices of the Zambian people that they have made. Let's also continue to think about reskilling our people and putting them in the productive sectors. So, as we do the resource allocation, let's continue to think about how we can ensure that we not only capacitate the Zambian people, but also give them the opportunity to exercise that capacity to earn some form of income, which will then make it a society that is admirable by everyone and really live with your motto that we are not going to leave anyone behind. We all want to be in the um, in the wining and dining places where life is improved and everything else continues to be better. Thank you very much.
So I would like to find out, with regards you being the associate director at SAIPAR, are there any interesting projects or works that you're working on?
That's a very good question. I think cyber should be understood in context. SAIPA is an institution that has a lot of volunteering individuals coming from various institutions that want to impact policy, sometimes at zero benefit, because we look at information as a public good that should be able to inform both policymakers, evaluators, and everybody else. So, in terms of what has been happening at SAIPA, in terms of, for example, economic advice and also policymaking for the last 15 or so years, SAIPA has been generating some policy briefs that have been shared with government institutions as well as anyone that wants to get that kind of information is usually available on the SAIPA website. This work has been in the areas of trade. We've looked at social protection. SAIPA has looked at things to do with, for example, mining, public-private partnerships, things that really impact our daily life and give some form of context in which where we are And beyond giving that context, we also give the potential policy prescriptions, or not prescriptions, suggestions and implications that policymakers can look at and tease and think through as they design their policies so that then we can improve the whole country. So the analysis that we've been doing, for example, we've been looking at the small scale enterprises, we've been looking at trading services, we've been looking at development corridors, we've been looking at the mining sector, and all these sectors that are critical to the development of the country. We have policy briefs. You can check some of them on the SAIPAR website, and some of the information is still being processed to be provided online. So we believe that the interdisciplinary nature of the economy is critical. And for some of you who are listening, you should also be aware that the legal, for example, position of the country has a huge impact on the economic part of it. So we've got the legal processes that look out for legal department, for example, which does analysis on court, reporting, court transparency, court, the issues of court availabilities, arbitration, and all those kinds of stuff. And also, we do sometimes provide capacity building. Watch out for a program that SAIPAR has been trying to develop for in terms of the short-term trainings for policymakers, researchers, and others are interested in analysis of these things. You may see one of the adverts very soon. To feel free to apply and to come in. We draw our expertise from various institutions and those that are willing to contribute to the development of Mother Zambia. So that's what SAIPAR does, and we look forward to your support. Please pass by, come to the offices. SAIPAR is an open place. There's nothing that is there to hide. We are on District Road. Just when you leave, like District Road, you bypass, it's right after you bypass Obama Turn Point, you'll find a poster written SAIPAR. It's an valuable working place, lovely people willing to share information and also really contribute to the knowledge and learn from you. In case you've got funds that you think you can give SAIPAR, give us to analyze something for you, feel free. We are available we have sufficient human resource as well as expertise to undertake complex projects, complex analysis of data, and tease out some potential policy implications for you, depending on what you really want to do as an institution. Thank you very much.
Thank you, Dr. Mudenda. It's been a very insightful talk. I'm pretty sure for any ordinary citizen out there, even for me who has little knowledge of the economy, I've really learned a lot from you. So thank you so much. Do you have any last words before we close?
Well, just say thank you very much for inviting me to this podcast. We look forward to diving into sector-specific areas, possibly in the next year, future, if you have time. There are a lot of sectors in the manufacturing sector. What is happening? What is happening in tourism itself? Subsectors of the economy, so that we can appreciate where the economy is standing and where we are standing as a country. I think that these are quite critical rather than just scratching on the surface of what's happening in the macro perspective. I appreciate your invitation. I hope that you will invite me soon as well. Thank you.
Definitely. Thank you so much.
Well, thank you.
Thank you, viewers. That was our episode today with Dr. Mudenda as we were shaping ideas and informing change. Don't forget to subscribe and follow us on Twitter and LinkedIn at Southern_Policy and also at Facebook at Southern African Institute for Policy and Research. Thank you.